Yo, good morning, everybody. Give me 1 second. What the hell is... yeah, give me 1 second real quick. I'm gonna play something real quick while I go do something real quick. Sorry about that.
Verse 31. But they who wait for the Lord shall renew their strength. They shall mount up with wings like eagles. They shall run and not be weary. They shall walk and not faint. Exodus chapter 15, verse 2. The Lord is my strength and my song, and he has become my salvation. This is my God, and I will praise him, my Father's God, and I will exalt him. 1 Corinthians chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand.
Sorry about that. I had to get some water. It's gonna be a long session. Appreciate the patience. Yeah, hopefully everyone's doing well. Good morning, Tony. Good morning, anyone that watches the replay if you hop on late. But yeah, so let's go take a look at some stuff. So we have FOMC, federal fund rate announcement. If you guys are on sports betting sites like Kalshi or something, they still have the bet that we'll have a government shutdown, right? Or not, right? Are we or are we not? One of the leading Democrats, basically Chuck Schumer, came out and said that he's going to make sure that he lets the government shut down. So I'm not saying financial advice, just saying, me telling you to do anything. But I mean, if one of the people that's in charge of signing something off to agree for us to not have a shutdown or to have a shutdown is literally publicly saying that there's going to be a shutdown, I think that, I'm not encouraging you guys to do anything, and I'm not a financial advisor. You got to make your own decisions. But I'm just saying, there's a bet going on. Is the government going to shut down or not? They basically came out publicly yesterday and said, yes, we're going to shut it down because of what's been happening recently. Just saying. Could be a good play. I don't do any sports betting or anything, but I mean, they came out and said that they're not going to sign anything. And last time we had a shutdown too, and no one's getting along still. So I think that's a pretty easy bet. I'm not telling you to do anything, like I said, but definitely go check it out. Right? Your preparation was perfect for last week. Yeah, told you. I told you. So a lot of stuff was happening. I told y'all. When we get to the Nasdaq too, we'll have a discussion on what overall happened, um, and then we'll kind of see what's going to happen. We saw a couple of points of interest last week that play a significant role, and last week was a bit chaotic. I thought I wasn't going to get any messages of people blowing their accounts, but when times are a little bit more iffy, it generally never fails. So again, do not overtrade and over leverage. Right? It seems so simple, but it's so difficult to not do. Trying to overtrade and over leverage is from the mindset of I need to get it back or this isn't happening fast enough. Both of those are a problem. And both of those are the reason behind why people hurt themselves many times. And if you just remove that stuff entirely, you'll see that that decision is a lot more like profitable for you long term versus overtrading and over leveraging, getting out of drawdown all the time. It doesn't mean you're not going to go into drawdown, but it's going to be a lot lighter if you just listen to this advice. Okay? Don't overtrade and over leverage. Please. Please. Because I'm just going to tell you guys over and over and over like I always do. Especially you guys in my private group. You guys hear it from me nonstop. And thankfully, I don't think I've had a student overtrade and over leverage in about 6 months, 7 months. So it's only like, 3 or 4 people out of everybody. Everybody starts, when they come to me, they're overtrading and over leveraging. Once they remove that, many of them can make massive strides, and the improvement starts to creep up on them. And then all of a sudden it's all at once. They just like, oh, I get it. I understand what's happening. I know I'm not going to hurt myself. And then confidence comes from that because when you enter a trade, you're not so concerned if you take a loss or if you win because you're protecting the downside by default by not overtrading and over leveraging. If you take 2 trades and you see the conditions, sideways or whatever the case may be, you will appreciate the fact that you didn't overtrade and over leverage versus regretting it. You're going to have the pain of discipline or pain of regret. And the pain of discipline is a lot more helpful long term. And it affords you the ability to be able to be profitable. You want to be profitable, right? Like that's what the goal is, everybody, right? Everyone wants to be profitable. Well, you can't do that if you're breaking these rules because you're not protecting capital. First rule of a fund manager or a risk manager or a trader, right? All the same, is to preserve capital. It's not to double your account. It's not to quit your job, right? It's not to do any of these crazy feats that are possible, but they're not possible if you break like this discipline. You have to limit the downside. And what we do here is called a regressive risk approach. You take a loss, you cut your risk until you make the loss back. If you go into a losing streak, you have to make at least half of what you've lost back before you can move your risk up a little bit. But even then, it's still not fully at the normal risk until you make back the loss. That's how you have this beautiful equity curve that goes up, maybe a small drop, but then it's very minimized. And then all of a sudden you're back in line when everything gets a little bit better or when you get more clear as far as what price is doing. This is the battle that's inside of your head and all of our heads at first. And it's a discipline that's built to not do these things because we're impulsive. We're humans, right? Human nature is what it is. And if you don't try to intercept the human nature by placing guardrails around you, it results in me getting texted all the time in times like this. And I have nothing against you guys reaching out. I don't want to discourage you guys from reaching out, and I'll never put you on blast. But I'm going to just say the same stuff over and over until you stop, right? And, worst case scenario is people stop trading entirely because they just can't fix that when it's your responsibility to fix it. Just don't do it. Just like, we don't cross the street when there's like 1,000 cars coming. Because why? We'll get hit by a car. If you're over trading and over leveraging, you're going to get ran over by or steamrolled by the market when you can just cautiously do what you're supposed to do as a professional. It's what the professionals do. You want to be profitable. You want to be a professional, right? You want this to be your career. Well, just like in any other business and with any other skill set that's performed at a high level, there's ways to do things properly and ways that will not be done properly. So it's no different. And if this is one of your issues, your main goal this year, or at least for the next 3 to 6 months, should be to stop those two things: over trading and over leveraging. That doesn't build confidence by over trading and over leveraging. And the worst thing that can happen is you break these rules and you continue to do this and you end up being profitable as a result, or you make a profit, or you make the losses back. It's one of the worst things, because then you're reinforcing bad behavior. So yeah, hopefully, I can get you guys to listen to this. Anyone that's having this problem, that's heard me say this over and over, because again, I already know how it feels when you do it. It sucks. You just sit in regret, and it's not pleasant. It doesn't make this fun. So, but again, it's very simply stopped by you just making that decision. You have to prove it to yourself that it's something you can do, first of all, and it's something that could be beneficial. The only way you can figure that out is by doing it. Just like how getting out of drawdown, the only way you can learn to trust yourself that you'll get out of drawdown and not blow your account is by going into drawdown and then getting out of it over and over and over and over and over again. There's no way around it, and with a lot of the different things that we're required to do as traders, it's very much the same. You got to do these things the wrong way, then do it the right way, and continue to do it the right way, and then so you can see the benefits of doing things the right way, like with risk management. All right, let me look at the chat. I appreciate you guys hopping on. Don't forget to like the video, by the way, if you get value. It really helps the channel reach people just like you, because there's a lot of traders that struggle, and literally the only reason that I have a social media is to try to help those people. So if you can help me with that, be much appreciated. Let me see the chat. It is the hard. Yeah, you're right. You're right. It's one of the hardest things to do, but yet it's the most easy, right? It's got one of the easiest solutions, but it's the tactic itself, the process of not over trading and over leveraging. That's not overly complex, but doing it, it's that inner battle. It puts it on full display, what's happening behind our ears, or in the middle of our ears, in our brain, and that's where the real battle is fought, so that's why this can be hard for a lot of people, because we've never had to really sit with our flaws. A lot of times we like to overlook them and then just keep pushing forward, kind of, putting blinders up, because we don't want to look at some of the ugly things about our personality until you start to trade. Then you're forced to look at it and make improvements. I always say that trading is the most dynamic, most effective, if done properly, most dynamic, most effective personal development, personal improvement journey you could ever try to participate in. But it's not for the weak. That's for sure. The weak-minded. It's not for the weak-minded. It's not for the lazy. It's not for the unorganized. And if some of those traits you find yourself lacking, you have to make some adjustments. I had to revamp the whole way I view the world. My whole way of thinking had to totally be scrapped and started from scratch, right? And it's a process, See, let me see. It's the hardest. I would say last week was a game changer for me. I learned that I am the one causing myself pain by taking trades when I shouldn't. It really is that simple. Yeah. Yeah, it's a amazing statement. I really, really like seeing those types of statements. It's a big aha moment when we realize that it's us, you know. It's us. We're the ones that are going to save ourselves. Right? We're the one that has to make the changes. We're the person that we have to look at in the mirror and be proud of. You know, we're also the person that has to be trusted with our money. And if we don't trust ourselves because we tell ourselves promises all the time, like I won't do this or I won't do that, and then we constantly go back and do it. If you had a friend that told you that they weren't going to do this or do that, and they just continuously did after and then breaking promises after promises after promises, can you trust that person with anything? Eventually you get to the point where you're like, I can't. I probably won't even be able to associate with this person. You know, in trading, that's like, okay, I'm done. I quit because I just can't. I don't trust myself. I can't do it if they're not willing to make the changes. So that type of admission, saying that, you know, I am the one that's causing all my issues, and I'm also the one that's going to fix them. It's a huge aha moment. You know, it's very, very clearly telling you that you're headed in the right direction. You know, because we got multiple battles going on internally. We have the mental side of things, psychology side of things, and the technicals, right? And it's obviously with risk and whatnot too. You know, if both of them are weak, or if one of them is weak, you're going to see it in your trading. That's why it takes time to really get good at this, because you have to be multifaceted as a trader mentally. You have to trust yourself. Your personal development has to be very high, and your trading skill set needs to be seasoned, very well seasoned. You know, it can't just be willy-nilly. Everything's random. Let me just take a shot at anything and just see what happens. It's just not how successful traders think. You know, anybody can get lucky, win here and there, take a payout here and there, but then they blow the account. Anyone could do that. You know, it's not hard to do that. You know, long term though, being profitable long term, making this a real income. Now that's going to require a high level of understanding, high level of personal development, and it's just the way it is. It's the reality of it. You know, people don't like talking about this stuff because it doesn't get clicks, or, you know, it doesn't make everyone feel all fuzzy inside. But, you know, this is war, like ICT says. And if that fuzzy feeling is what we look for every time we get on the chart, or every time we think about trading, that's all we want to feel, and we're not taking the good with the bad, you know, reality will set in at some point. And if the market has to show you the reality, it's not going to be enjoyable, because it has no mercy. It doesn't care if you are going through things in your life. It doesn't care if you have $0 in your bank. It gladly puts you at negative. Okay. Doesn't matter if you haven't had a win in weeks, months. Doesn't matter if you haven't passed a funded account. It is neutral. It's a, you know, a neutral entity that's just offering price algorithmically. Doesn't care who you are, which is another positive for this industry, because you know, you can come from nothing. I have, you know, from being homeless and everything else, you know, it doesn't matter what your background is. It's one of the more positive things about the market. But again, it could be ruthless. So again, that's why we need to follow these rules. That's why overtrading and over leveraging is something that I talk about every Sunday, every single day in my private group. Because if you can't stop those things, I'm telling you, you probably have felt it. It seems impossible at times if that's what you've been doing. It's true. If that stays in your skill set and you refuse or be combative to fix these things, or fix the things that have led to you thinking that that's the right idea, it's going to be very, very rough. It doesn't have to be that way. So yeah, hi Mont, appreciate you sharing that. sharing that perspective and what you kind of discovered last week. Again, that's a huge step forward, huge leap forward. So I hope you look at it that way, because it is. Baby steps, right? You got to cross one bridge, then you got to cross another bridge. You got to get good at one skill set, then another skill set, right? It's a process, so yeah, with that being said, again, we do have the federal fund rate and FOMC, so we're still in January. It's the end of the month, right? So the end of the month generally caps the monthly range, just like how the end of the week caps the weekly range, just like how the end of the day generally caps the daily range. Okay, so we got to be really, really cautious of that. So our risk is still going to be reasonably cut. It's not going to be full risk that we normally use. But if, every single week that we look at the economic calendar, we have to think about, okay, what is the profile going to be, right? What could it be? What days have the biggest news events? We're pretty jam-packed all week. So it should be a pretty dynamic week. We'll see, because it's still January and it's, again, the end of the month. So we got to be really cautious, manage risk properly, because we got to preserve capital, right? February is right around the corner. Next week is February. So this week, again, we have federal fund rate, FOMC, then we have NFP, right? So a lot of stuff's happening, and a shutdown is looming, which I believe is going to be taking place. So here we go again, right? So you want to be very cautious. And this here is being floated around a lot, unfortunately. This is, in my opinion, the main thing that has spooked the dollar and sent it down so aggressively, because and the World Economic Forum meetings, this was also being thrown around and mentioned, right? There was a lot of conversations. What if? That's uncertainty. And if they do that, this will be just the beginning for the dollar's decline. Because overnight, if they dumped off a big portion, Europe, if they dump off a big portion of the government debt that they hold, I mean, I wouldn't be surprised if we were to get down to something like this. Like, that's really, really crazy drop. Whoops. It's a really, really deep drop down to that level. But yeah, so that's part of the risk, right? We have all these news events. We have wars, Iran. I mean, we got all these things going on. So again, not only is the end of the month a time where you promote yourself to cut your risk a little bit, but we also have these other underlying factors that can have huge implications in the marketplace. So, I say all that to make you think about, is it really worth overtrading and over-leveraging? Is it really worth that? Do you really think that you should do that with all this stuff happening? At any moment, a black swan event can happen? Really? Like, is that something we want to continue to do? I don't think so. And I hope at some point with your guys' time spent with me, hopefully at some point you feel annoyed as hell that I say the same thing over and over and over, because eventually you'll realize that, okay, this guy's, if you haven't already realized, this guy's giving advice that should be followed, because a lot of it comes straight from ICT too. Obviously I have my own system, but a lot of psychological stuff, like I have my students, I encourage them to listen to an ICT Twitter space every single week and take notes of them. Listen to them multiple times, one every week if you can. Because you can dissect a lot of things from those. I have other resources too in the private group for psychological studies. But that should be something that you do every week, because it's super important, especially when there's times like this. Situations like this, it's conditional awareness, right? You're aware of what's happening in the world, so you can be fully prepared and not do anything dumb and get caught up in something and totally faked out, right? So yeah, you guys here on YouTube should be thinking about psychological studies every week too, right? Find your own little resources. I have some in the free Discord. You can go check that out. So lots of powerful stuff in there too. But for the most part, you want to listen to people that are really, really smart with risk, that aren't over trading and over leveraging, that aren't trying to make you ecstatically excited every 5 seconds just to keep you here, because a lot of times they're just blowing smoke up your ass, and that doesn't do anything for the bottom line and your goals. Okay. So if you haven't been doing that, you need to definitely consider doing that. There's a podcast called Chat with Traders. It's a really, really good podcast. One of my mentors, Joe Miller, who's a ICT trader for the last like 15 years or something like that. He put me on Chat with Traders on Spotify. It's definitely one of those resources that I encourage all of you guys to dig into, because the dude's basically interviewing some of the best traders, all the traders that are really good. He gets them to come on and talk about their story. And if you trade ICT concepts, most of the time, you're not going to want to really listen to what they're talking about, like when they talk about how to get in and all these things. You keep your focus on ICT's concepts and what we do here too, if you enjoy what we do. But whenever they talk about risk and psychological management and how they overcame this or overcame that, those are things you definitely want to take note of, because a lot of it's universal, because again, we're all human. So yeah. So again, like I said, we have federal fund rate FOMC. So we'll see if we can get some fireworks. We're going to look for potential high or low of the week on Tuesday or Wednesday. We always want to anticipate trying to see that. And if it does unfold, then great, because that's the ideal scenario for one shot, one kill. It's an ideal scenario for the weekly range expansion. Sunday, Monday is generally accumulation manipulation, which goes against whatever price is going to do generally. Sometimes, like last week, it kind of just rips right off the bat. But we had a purge and revert Wednesday reversal profile last week, which we'll get into in a minute. So Wednesday ended up having the harshest move. So this week, again, we have Wednesday with a heavy news event. Because of this heavy double news event, which is the federal fund rate, which is interest rates, they're either going to keep it the same. I don't believe they'll increase it at all. They may get a cut, right? The forecast is they're not going to do anything. That may be true. We'll see. Then, of course, we have the FOMC statement. So it's going to be a lot of big, heavy fireworks coming. Just by looking at the news right now, we could see that there's going to be some dramatic price delivery. So yeah, don't be a gambler. Okay. This is like way beyond the AM session. So I won't be here for that. We'll make assumptions of what we think it could do, what it's going to reach for possibly. But we're not going to hold on to a narrative or opinion too tightly, because this can change everything depending on what happens. And we don't know what's going to happen. Plus the shutdown, plus, all these things. So hold on to things very lightly. Then we got Thursday, unemployment claims, finishing off the week with PPI. So yeah, this is some of the stuff you want to think about. You want to keep tabs on some of the headlines, especially when it's something like this that could be very negative for the dollar. It's probably potentially bullish for the stock market, right? If we see the dollar decline, the yields will probably decline, and we'll have the bonds potentially rally if we're going to support lower dollar, right? So those are some things we're going to keep tabs on. And yeah, so let's see, is there anything else? That'll be it for the news, opinion, and some of the inner details about how I'm thinking about the news this week and the condition overall, what that could lead to. So if we look at the bonds and yields, right, we'll start at the bonds. We see that this monthly order block that I've been pointing your guys' attention to, it's still acting pretty pretty solid at this monthly order block level. Again, if dollar is going to decline, we would like to see this hold and then continue to go higher. For now, though, we just have to wait. We're in a moment of, okay, well, it's going to have to make a decision from this level. It's either going to come up a little bit, still respect this weekly breaker. That's what this is. And then decline, targeting some of these levels. First and foremost, though, the high and low that's the most important going into this new week, any week, it's always going to be the current low and the current high. Right, this is the monthly high and low, the current one for January. Then you go to the weekly chart, you find the current low, current high, because price is going to open up this next candle. And whether it wants to get up here or go down here, it's going to have to either break this high first or that low first. It's just the way it is. So that's why these highs and lows are significant. That's one of the easiest ways to identify liquidity pools, especially as a day trader, because just systematically that's just what it does, right? If one candle is going to, or if a move is going to continue, the current candle's range on the next candle, one, like the high or the low, is going to have to be taken out. If it's bullish, it's going to be the high taken out, right? Before it gets to any of these deeper levels, which may be your overall draw, right? Whatever upper level or lower level is your main objective. You want to keep that in mind. But the very first thing you pay attention to on any of the large timeframes, monthly, weekly, or daily timeframes, same thing could be true for like the 1 hour and 4 hour and whatnot, but it's a little more short term. This is very long term, so going from here up to the high up there, right? Oh yeah, they break these down a little bit different, but it'd be a reasonable range to get us up there, right? Or especially going to the downside here. It's reasonable. You don't have to really concern yourself too much in an obsessive manner with like, is it going to target this or this low? We have a lot of stuff to do before we get there. So, this is how you identify what's most important right now as you go into a new week, every single week, and how you should start plotting your liquidity if you've had somewhat of a hard time doing so. You got to keep it simple. Hopefully this is easy enough to understand and why. And I show this stuff every week, right? You guys see me engage it, so that's how we're able to stay in line, right? It's part of the tactics we use to stay in line and pick the right liquidity all the time. So yeah, you can also see this quadrant in there. If we go to the quarterly time frame, talked about this last week. We're now below the previous quarter, so the quarterly low in this current quarter, right, for the new year, basically the main objective, the first target for the year from these higher time frames was that quarterly low. See that? So if we were on this candle going into the new quarter in December, you could have anticipated, which I believe we talked about, this high and this low, right? It's a quarterly high and low. So if this quarter is going to target the lows down here or the highs up here, tell me in the chat, if we're going to go higher, what's the first target based on what I just said? What's the first target on a quarterly basis that would need to be targeted with this very next candle, right? If it's going to go higher. Right? Is it going to be these highs up here? Or is there something else? Okay, you said weekly breaker. Okay, so if this candle here was, the current candle, if this candle here is going to go higher, what would be the target, the most near-term target, based on what I've just mentioned, in terms of plotting the most important liquidity right now? Tony said weekly breaker. Pre-quarterly high, exactly. That it's not necessarily a pre-quarterly high. Oh, previous quarterly high. Yes, exactly. Exactly, Slim. Exactly. The quarterly high. Because remember, when you look at the higher time frames, there may be a breaker, there may be these this order block, that order block for value gap. But in order for this, if you're going to look for it to go higher, in order for this to get up there, the very first thing is the previous quarter's candle, right? The high, because we're inside that range, right? If we take some of the markups off, right? And same thing's true if this candle or the next candle is going to end up going to the downside. Are these our main objective, what we're going to be looking for and solely be dependent on for targeting? Or is there stuff like this low that's an early liquidity that we can target, right? Every quarter this is true, right? Like for this candle here, right? There was the quarterly high and quarterly low, right? If it was going to go higher, maybe you wanted to see it go up here. Okay, well, before it gets there, it has to take this candle's high for this time frame. This same tactic is used on the monthly, weekly, daily, 4-hour, right? The same stuff is happening because I mean it just makes sense, right? Most people don't think about it this way. They try to overcomplicate it, right? But this is a very simplistic way of viewing liquidity because above old highs and above old lows, there's liquidity there. And in order for these deeper levels to be targeted, it's just a truism. If the market's going to look the way it is and operate the way that it does by printing a candle, then another candle, then another candle on its way to whatever target, it's going to have to use the previous range. The previous range, in this case, high being the quarterly high or quarterly low, right? Whether it's going up here, it has to take this first. Or if it's going down here, it has to take this first and then this first as well, right? So yeah, I've mentioned this before, but hopefully this is a good refresher, right? For those that may have not applied this perspective. It's a very simplistic way of pulling out liquidity. A lot of people overcomplicate liquidity because there's all these PD arrays and all this stuff. Price is only going to do one of three things anyway. It's only going to either attack some form of a high or a low, create rebalance or retrade to an imbalance, or some other PD array if there's like an order block or something that's clear, right? Like in close proximity, or it's going to consolidate and do nothing. Well, just go sideways, not do nothing, because there's stuff to do inside of this too, right? So yeah, hopefully that makes sense. If you haven't wrote this down, I highly advise you to do so. I've talked about this numerous times, so definitely write this down, you guys. But yeah, so again, more long-term target, because this is a quarterly perspective, right? It may take 1 or 2 quarters to get up into a level like this or up here, right? It may not be large ranges. We're going into a time of year where large ranges can be expected though, right? February to June, right? You can expect fairly reasonably sized volatility in candles. We'll see how civilized, the U.S. government's going to be, like on both sides. We'll see if they can not allow politics to get in the way of, making sure everything is stable, but that's not something we can control. So the volatility is a good thing. Don't be scared of it. Just know that if you know that there's things around us, like we talked about today early on, you got to lower your risk. Make sure you're managing risk because your first priority is to manage risk, preserve capital. No capital, no account means no opportunity. So that's why it's the number one thing you need to learn how to focus on. Entries and everything, like overall analysis, that comes later, right? Second to preserving capital. Okay, so yeah, again, right? So the current candle, we're about to end this month, right? We have 5 days left. So once this candle forms, well, even just with this here, right? Just the way it looks, we have this high here that's going to be significant and this low. So the next candle, if it forms and we're still inside this little range, That's your near-term liquidity. That's the very first thing you're looking at. You could frame out things up here or at least mark them off, right? Or down here, you can mark them off. But again, you want to make sure that you keep your eyes on this. There's also an order block here, right? Bearish order block. Clearly, it's being respected pretty solidly. So that tells me that we may look to, from this perspective, it may look to continue to try to dig for sell side. We'll see, right? We do see that a wick here is being respected. Wick here is being respected here, right? Inside that order block. So that's pretty solid order flow, aside from the fact that it's sideways. It's pretty solid order flow showing that we're still respecting the buy side delivery. It is also respecting this too, but that's the nature of price going sideways. So we have to wait for some type of breakout to really be assured of where it's going to go. But again, before that happens, you still have things that you can identify and make sense of. That being these highs, right? And anything in close proximity, like this low, this high, that hasn't been traded into, and then close proximity PD arrays, like wick 50% levels, okay, order blocks, any type of fair value gaps that you could see. We see that there's not really any fair value gaps here. It's just a sideways, sideways mashup, right? We do have relative equal lows here, but that's a little bit far away. We'd have to break through some deeper levels in here to really get behind that. It's really far away, right? These are 3 months at a time, so it's something that we got to be gracious with, right? Give us some time. But nonetheless, we're sideways, and we'll try to make an argument for this to go lower. If it does go lower, indices should go lower. Foreign currencies should go lower, or at least be supported to go lower, right? And then dollars should go higher if this goes lower. That's the healthy correlation relationship, right? If you're trying to confirm or very much verify that you're in a very strong down movement for the indices, you want to see this go lower, the yields go higher, the dollar going higher, currencies, GBP and euro going lower, and you just look at those together, and that's what it should look like if you're trying to confirm if you're in a very fast sell side movement. And the opposite is true if we're going to the buy side. You just reverse everything, right? This goes higher, dollar goes lower, yields go lower, foreign currencies go higher, and then the indices go higher, right? That's bullish confirmation internally with the overall market analysis for risk on, risk off related to the NASDAQ and the S&P. And if you trade any of the other assets that I just mentioned, right, if any of them are things that you're trading, the relationships are all important together, even for those other assets. So it's not just for the indices, right? It's for everything. It's a very thorough analysis, okay? So again, I hope this stuff makes sense. I hope you guys are, taking note, because this stuff it's not the sexy stuff, right? It's not like, oh, get in here, enter here, blah, blah, blah. But it is stuff that allows you clarity, right? The whole point of this channel, part of the point of this channel is to get you clarity, bring you from being lost and confused, not knowing what the hell's going on, or how to trust anything, or what should do this and do that. And, how can something be, how can I be confident in whatever direction I'm looking at? Some of these things are how you do that. Some of the different components. We do this every single week, right? And you see the result. But yeah, so now let's turn on the markups again and kind of get through this one. So, we'll keep tabs on these levels. Like I said, that's a quarterly wick. So we got 75% acting very sensitive, right? Blew out this low, and this low, high, lower low is a breaker. So this breaker, right, all of this should be able to act as a balanced price range. So we should not come up beyond that, but preferably we don't even get below this last down candle's 50% level. We called this for weeks at this point. I told you guys that if it stays below this, it'll continue to drop. That may have a negative influence for the most part if it continues to go lower on the NASDAQ and the S&P, right? We do see that this low was swept, and we're kind of trapped in between this monthly bullish order block 50% and this weekly bearish breaker here. And We also have an inverted fair value gap here too. So I am going to be bullish on this. Even if this was the indices, I'd be thinking the same thing, right? I'm only bullish if it gets above this high, because then we'll have the breaker getting disrespected, right? If it gets above this, we'll have this fractal high taken out. And then we'll also have this inverted fair value gap turn into a reclaimed bullish fair value gap. So that would all, at least for me, justify that we're going to continue to go higher. If it doesn't get above those levels, there's no real reason for us to anticipate that this is going to go higher if it doesn't get above these levels. This is pretty telling here, so we're going to have to be we have to monitor this very closely, because when price wicks something like this and then immediately comes back above it this quick, like this dramatic, that's not necessarily telling us, until it proves it further by like maybe breaking down below the 50% of this, it's not telling us that it's super, super bearish, right? Because this could easily have just been a purge, right? And if we go over here, see, so it's the weekly. See, there's not really any SMT in there. If we pull up all three of these, yeah, there's not really any bullish SMT either. And the other two, the 5-year and the 10-year, they're still looking like they're not done, trying to reach lower. We're still inside this fair value gap too. So we'll see, right? The only way we'll be bullish again on this asset is if, again, it gets above here, and this one gets up here, and then this one gets up there too, because then we have our targets up here that we've had outlined for a while. Okay, and again, why do we spend a lot of time on this asset? Because it's very important, right? Bias and narrative, to be trusting in your bias or narrative and have clarity as far as why some level should hold or why a particular direction should be unfolding with a high degree of confidence, it requires a layered analysis approach. It's not just looking at the NASDAQ and thinking this and that, right? Oh, it's going higher because there's higher highs, higher lows. You know, it's not at all what influences confidence in, a bias or narrative, So, and you guys have been with me for a while. I've seen how important this is and how often it really supports us. Or if it's got a cracking correlation and things are all over the place, generally the conditions are a bit nasty when it comes to the foreign currencies and the indices and the DXY, right? So yeah, again, we're going to watch and see when this opens up. We'll see if it can hold this, right? If it does and it gets above this high, we'll be bullish in the name for deeper levels to the buy side. For now, though, it's looking like it's still respecting the move lower. Even if it does turn at some point, it's not ready just yet for us to really assume that. So it's respecting this breaker. Fair value gaps, up candles, right? Order blocks, bearish. The wick here, we'll see how this next candle respects that or violates it to the upside. Again, if it gets above this, not only will we have multiple PD arrays, but this up wick being traded through can then be classified as a balanced price range. So then if price trades down below or trades down into it again, after we take the high out, we should not get past the 50% of this. So that would be how, if price gets above this high here, that'll be how I would be thinking and what I'll be looking for to help justify continued buy side if it was to take place. The main focus, in my opinion, for now, given what we see here, is to observe what the response is going to be with this wick, right? How it's going to respect that on the next week, and whether this high gets left, right? Or if we just slide through it, further confirming the down movement. And we have trendline liquidity down here. If it does do that, same thing as this wick. If it gets above it, it'll act as a BPR going higher. This wick, if it trades below this wick, the same thing would be true. If it trades up back into that after overtaking it, I'll look at that as another premium array or a balanced price range. So I would not expect or anticipate price to want to get beyond the 50% of this if this is in fact violated. So that's another scenario if it does continue this down movement, right? And how I'll continue to verify and trust that price will continue to go lower. Plus, we'll have this these up candles here. So they may act as a bearish order block if it gets below it again and closes below it. Okay. And this again impacts reverse to the DXY, and it impacts positively or positive correlated generally in terms of where it's headed with the indices and the foreign currencies. Okay. So yeah, do you guys have any questions about anything we talked about? If not, we will go ahead and move forward. I think we're going to keep it that way, right? We're going to do the analysis, and then I'll ask questions before ask if you guys have questions before we move on. See if that makes it a little bit smoother. And if you don't got any questions, just throw one in the chat. Okay, Slim, appreciate it. Okay. All right, so moving along. So if that's what we believe the yields are going to do, if they're going to continue to drop, we're going to have to continue to watch this fair value gap here that I've been mentioning. Before it even got up there, we were talking about it. And as it's been in here for the last weeks, we've been using this. We've been navigating this, seeing if it was going to hold, because we broke this high up here, right? Drag that over. Price has been using it as support. It's also a monthly bullish order block. And so we've inverted this potentially bearish fair value gap. It's staying above the 50%. It just seems like it's really, really accumulating orders inside of that. That's what a consolidation is, right? Mike, if so tier 2, you would have to basically cancel your current membership and then buy the lifetime membership. It's the only option for tier 2. I used to have monthly tier 2, which includes one-on-ones, but I took that option off. So it's either tier 1 or tier 2. So yeah. I think I sent you a message yesterday about that. Let me double check. Oh yeah, I sent it on the 23rd. Yeah, hopefully that makes sense. But yeah, nothing's changed overall, right? In this overall view, we targeted the liquidity void up here. Let's go to the daily chart. So this is a liquidity void, right? What is a liquidity void? It's a void of liquidity, meaning that there's no trading whatsoever around this area, right? There's no buy side or sell side wicks or bodies that are presented inside of this, right? So sell side was offered here, right? You could see that very visual, very clearly, but there's no buy side that was offered in there. So what did they do, right? Later on, as we targeted, right, before the fact, as I outlined before the fact, price ended up running right up into it, presenting it with buy-side delivery, and then we came right off of it. Offered buy-side delivery one more time, and then price ended up sinking, right? Coming back inside this little gap in here. Okay, so there was no buy-side or sell-side offered in here. Price came down and offered both, right, yet again. So yeah, again, if we're going to see the bonds potentially go lower, we need to see this go higher. Okay, or we would prefer. We don't need to. It doesn't always have to be, because sometimes there's a correlation problem. But if price is going to go lower in the yields or in the bonds, the yields should do the opposite. They should carry up through the buy side. If we're in a healthy to trade environment, a healthy trending environment, right? And if things are cracked in correlation, that automatically tells you that we're in a potentially low probability, high risk environment. Doesn't mean you can't trade it. Doesn't mean, that high risk environment can't be something you can engage. You just have to understand what condition you're in, because it may not look as picture perfect as, you may have experienced before or maybe anticipating, right? That's just kind of the way it is. It's one of those, again, truisms in the market. ICT has said the first rule of high probability and low resistance liquidity run conditions has to do with correlation, right? Market symmetry, specifically. That's how he described it, right? So yeah, and again, this is one of the first things that you want to look at. That's why on Sundays we start from one asset and then finish off with the assets that we like to engage. Okay. So again, we've come off of this liquidity void and we're back inside this weekly fair value gap. And again, if we're going to see the bonds go lower, I'd ideally want to see this continue to hold this monthly bullish order block. Okay. Stay above this weekly fair value gap and leave this low intact. All right. And if we were to break down below and say get below this, right, this little gap in here, it'd probably invert that. And then that's when I would start to determine that sell side is going to be more favored than us looking to try to, run to the buy side again, right? And then, of course, if it inverts that, it's just giving you even more confirmation that it's going to continue to go lower in that case. Until that happens, I'm not interested in trying to see this go lower dramatically. Right. That's just kind of, again, it's just the way it is, right? We got to let price do what it's going to do. And this is how the market operates. This is how it treats these levels. And if 3 PD arrays in a bullish trend are not violated, you're still in motion to go to the buy side. Same thing is true if we go to the sell side. Okay. It'd just be PD arrays that are above price. So again, as long as this stuff stays intact, right? We also have this larger wick in here. So we've got 50% of that wick, right? Actually, go pull that up, make a big screen. Yeah, it's the 50% of that wick. So yeah, we'll keep tabs on that too. That's another PD array, right? Another pre-PD array. So if it, if it closes below this and closes below this low and closes below this fair value gap and then shows no more respect to this monthly bullish order block, again, ask yourself, even if this was the NASDAQ or any other asset, if that area was to be violated, would you really be confident in forcing buys? Is there really a reason? Are you really going to demand it? No. You should be flexible. And if 3 PD arrays are violated, there's really no reason for you to try to push too aggressively like that. There's no reason. Literally, none at all. So ICT said it in a very crude way, right? He said, if 3 PD arrays are broken and you're still trying to push in that same direction, the next thing that's going to be broken is your ass. That's what he literally said that word for word on a Twitter space. Literally. I think I have the quote somewhere, but that's literally what he said. And that's why I think that's why it stuck with me years ago. And it's true. It's super simple thing to understand. Yet 99% of people don't even think about this. They'll hear it and it'll just go over their head because they're focused on, oh, well, how do I get in the trade, or focus on other things. But, this is something that's very, very obvious, just like the high and low idea that I was telling you guys about earlier, right? Most people aren't thinking that simple because we're trying to overcomplicate it. So the simplistic things that can be very beneficial to us, we kind of overlook or kind of stroll right past until, you get more years of experience, and then you realize that there's a lot of simplistic things that are very powerful that we may have not put so much stock into before, but it's very important to do so eventually. Okay. So yeah, if you guys haven't been using that, I talk about it all the time. If you guys haven't been using that tactic, I really encourage you to start practicing, right? Observing, going back through old data and seeing, okay, well, if there was a move I was going to take, when it turned around, how many PD arrays got taken out? Can I count 3 of them? And then what happened after those 3 PD arrays got taken out? Either on the higher time frame for bias or on the lower time frame for when you're engaging, right, in an opportunity. Because the same thing is true there too. You know, you don't want to see many PD arrays getting taken out if your entry model showed up and then it takes out 3 PD arrays. Say you wanted to buy in here and then it gets all the way down into here. You really going to hold that? Is that really something that's supporting your model? Your model has now been collapsed, right? It went through your model already, the level that should have been moving. So what does that mean? You should get out. Or the next thing that's going to be taken out is your ass, like ICT says. Same thing with narrative, So yeah, again, these are my invalidation levels. So we'll see if price does end up, getting below here. Okay, but I would prefer to see it not get down to here because when you look at this price delivery, we have a high here that's been violated here. We have the low here, okay? Okay, and then we have the buy side delivery as well. So sell side's been offered here. Liquidity has been purged. PD array has been met. And then price reacted from that PD array. And then we got up above, right? We attempted one more time, right, to just clean up any other gaps that may have been left behind here. And then immediately got above it. So what did that do? It turned into a monthly bullish order block. And then ever since, we've been using it as support, especially since it got above this weekly fair value gap. And this monthly order block here was used to then send us up to the liquidity void up here that I pointed your guys' attention to before it went up into that level. Or just go back and look at the replays, and you'll see that I was mentioning this, and it hit it perfect. Right? So yeah, this will be my invalidation. We'll see if we can hold this and continue to go higher. Obviously, DXY has a pretty nasty crack and correlation right now because of all the uncertainty. So we're in a market that is a bit chaotic and skewed. So you want to keep that in mind when you're thinking about your risk profile and what you're trying to do. Be aggressive or, be a little more conservative. I encourage you to be conservative all the time. Unless you really feel confident about something, then, you'll make your own decisions. But by default, you should be conservative, right? I'm not going to overtrade and over leverage or look for 1,000, positive trades in one day or, look for some unreasonable amount. Be okay with base hits. Base hits will outpace anyone looking for home runs every day because there's consistency there. Home runs, not necessarily overall consistent every day, especially if you're an active day trader. Unless you're a swing trader, right? Obviously, then you can catch larger, big moves by framing it on the higher time frame, finding your entry on like the 15-minute or the 1 hour. Then you can kind of swing those positions because they're higher time frame levels, right? But as a day trader, you want to be very conservative. 1 to 2 trades a day, 20 to 30 points. If you're trading the NASDAQ, that's plenty because you could scale it. And if you frame from the higher time frame, you open up the doors to get bigger moves. But, while you're working up to those larger objectives and getting good with the discipline and trust in yourself, like we talked about earlier, you want to be very gracious and give yourself that cookie, like ICT says. 20 to 30 points, that's a cookie, right? It's something for your time, so, and it's much more than that too, because again, it could be scaled. If it's like 2 contracts on a micro, it could still be, 2 or 3 or 4 on the NASDAQ, and you can get quadruple or 10 times the same, 10 times the amount that you had just with a bigger amount. Okay, Slim said, well, first of all, I hope all this makes sense. Hopefully you guys are able to make sense of this. It's pretty much all the same stuff that we talk about. Nothing's really changed for this asset. Still holding in this level. So unless that is upset, there's really nothing more to dissect. But Slim said, I have noticed in recent weeks that my problem has been that I am chasing dollar amounts. Yeah. Oof. instead of focusing on becoming a good trader. Yeah, that's a very common thing. And it hasn't been the best condition. Yeah. Oh, dude, you could say that again. You can definitely say that again. Here, let me do something real quick. Yeah, that right there is a really, really important statement. 'Cause I've been talking about this since November. Those of you that have been with me for a while, I said from November to the end of January, it's going to be a time where you want to make sure you lower your risk, where you don't overtrade and over leverage ever. You shouldn't do those anyways, but especially during times like this, that 3 month span going into the first quarter of the new year, December 15th. That's when the New Year's quarter starts, the first quarter. And then just finishing off the previous year. So we're in the midst of the end of the year up to December 15th, which also starts the new year. So the ending of the yearly Power 3 ends on the 15th of December, and the new one begins the 15th of December. And then all through that, you're in the beginning stages of the year, you're in the beginning stages of the quarter for the new year. And then a lot of people are on vacation. So they're just getting back generally after like the last week of January. You would be too if you were a trader making billions of dollars, millions of dollars, tens of thousands a month. I mean, you'd probably want to enjoy your life. You wouldn't be ball and chain to the market. So big money, that's how they think. At least from, what people have said. And especially with the way that they talk, right? Like they're always on private jets. They're always, all these big people that we see in the industry. You got to have planned times of separation, right? And November to January, if you're not going to separate, you need to lower your risk. Same thing with the summer months, which is generally the third quarter. Sometimes the summer months can be a problem. And then the fourth quarter ends up being fun all the way up until, like second week of November. Right, then it can start to get a little iffy. Okay, and let me see. Slim said, I went from having the best months in October, November to nothing working. Yeah, and that's not a testament to, or it's not a conviction towards your skill set. If you did well in the months that are generally better, which is the ones that you just described initially, and then all of a sudden things become a little bit more difficult, which ironically I mentioned would happen back in November. It's just part of the learning curve, and it's by force showing you that there's seasonal influences in the marketplace. So the ebb and flows, right? The volatility incoming, and then the slowness that happens as we leave certain parts of the year becomes really apparent when all of a sudden, after a huge win streak for weeks, months, or quarter to quarter, you then hit a specific time of year, like the end of the year, November, December, January. And like you said, it feels like it doesn't work. Something's just not working. The conditions have changed, and you haven't adjusted to how to navigate this type of environment. And a big tell that conditions are going to be the way that you've just described is cracks in correlation, is by looking at seasonality, which we do from time to time here, right? I mean, that's the thing. We, like in the first year, we can't experience this just by default until we experience it, right? And that's just one of those unseen piece of information and spans of experience that we can't foresee when we first get started. We don't see it happening. And then if we get beginner's luck and, it's just like all highs and, we haven't hit a down streak yet, once you hit that down streak, you got to be prepared. That's why I mentioned a lot of the realities in trading. So then you guys can hear it. You can be aware and say, okay, well, this is something I got to be aware of. I got to pay close attention to make sure I don't fall victim to this stuff. That way, when it does happen, if you've already heard it before, you're already prepared, right? Your mindset has been conditioned to expect the fact that you're not going to be perfect, the fact that there's times of the year that are going to be harder, which again, I identify for you guys. So you could just, hear it from me and then go see it, like November, December into January this year. It's did exactly what we assumed it would be. Harder to trade, less correlated, lots of, sporadic movements. Not that they couldn't be called, right? We're still able to navigate on a weekly basis, which I've showcased. But again, for the untrained or the untrained eye, right, to the student that hasn't experienced this stuff and overcame it over years, it could be very daunting and very discouraging. But I want you to really listen to what I'm saying, Slim, and don't convict yourself in what you've done and your abilities to what has happened in December and January, because it's unrealistic, it's irrational, um, even though we may not feel like it is, right? Um, because in the grand scheme of things, this is the reality, right? There's going to be times when there's ups and downs. There's going to be times when you'll be on a losing streak and you got to get out of it because conditions have changed and you may have just not experienced it yet. It's a testament to the fact that there's more to learn, right? And that's not something to be discouraged about. Again, having a hard time in the last 2 months, it could be expected. My worst months are generally December going into January, right? And that's why, again, I slam the issue home where I want you guys to be very, very limited, right? Same with the summer months. They could be a bit daunting. This year has been a little bit better so far than the last 2 years at the start of the year in December. Um, but that doesn't mean that just because I did well this year doesn't mean at all that next year I'm going to end up pushing it aggressively and trade it like I normally do. It's just not going to happen because seasonality is what causes this. Every year you'll see that some similar things happen at certain times of the year. And these are things that you want to be paying very close attention to, gathering data on, so then you can go into the next year and then the next year and the next year with an anticipation that you wouldn't have gotten if you didn't look at things this way. So next time you'll be ready. If it took a toll on you this time, it won't take a toll on you next time because you'll be prepared and you have that experience. And then some of the information that I've shared here, right? With it just being the reality, it's something to be planned for. It was a real wake-up call. Yeah, just look at it as it was a very, very important lesson that hopefully wasn't too expensive to learn. And again, if you took a hit to your confidence, just listen to what I'm saying, take a deep breath, right? And just think about it as you had to go through this to understand this. And ironically, you're on this call where I'm now laying out the realities of it. And so hopefully it puts a little bit more comfort in your head. So you're not going to be it's not going to be too heavy for the next couple weeks, for the rest of the year. And then next time when it occurs like this again, it may have had a toll this time, but maybe next time it's going to either have no toll at all because you're prepared and ready for it and accepting to it, or it just slightly is a bit frustrating instead of leading to like a spiral or blown accounts or any of that type of stuff. Okay, so yeah, hopefully that's helpful. I want you also to consider any negative things. This goes for all of you. Anytime you experience something negative, it's not negative. You're paying for something that you didn't know before. And the only way that you're going to know these things, if someone doesn't tell you, is through experience. Just like I said earlier, in order for you to get good at drawdown, you have to go through drawdown and you have to get out of it over and over and over and over again. Because if you're not experienced doing this and you haven't allowed yourself to be in these positions and then thinking clearly in those positions and then finally getting out of them, how are you supposed to get better at that portion of the skill set? Because it in itself, drawdown recovery is a skill set within the skill set that we're learning to call the market. It's part of risk management. It's part of preserving capital. So a lot of this stuff is going to have to be experienced and mentioned, right? But the experience part is never going to be able to be avoided, especially in things like Slim just explained, his experience he just had. And then what I just mentioned about like drawdown and getting out of drawdown, and same thing's true with bias and narrative. You got to do it and then see it play out in the higher time frame and have a repeated process so you can make it a system, so then you can have that consistency and that trust and that belief in what it is that you're doing. And hopefully here in this community, on these videos and these live calls and things that I provide to you guys, hopefully it's helping push you in the right direction in regards to those things. Because those are my main focus, right? to get you guys the right mindset, get you clarity, get you guys to understand the system, the process. And you can take some of the tools that you find interesting and useful, put them in your own, or just simply copy the exact system that I have. Because maybe it fits you, maybe it fits your personality, and it makes sense to you. So yeah, hopefully everything we've talked about up to this point is of value to you guys. I've gotten many messages over the last 3 months. I have been screaming from the rooftops on every video every week that these are the harder times to trade. If you can get through these times and survive and have at least some success, either in like mindset growth or, in your demo accounts, or if you do trade live already in your live accounts, you're going to be very surprised at how much cleaner things feel. Each time you get out of this type of condition and then go into the new, more clean parts of the year, like in February to June. So yeah, let me see. Slim said, so true. How we use it to be a better person to trade. Yeah, that's good to hear. And keep me updated, bro. If you follow me on Instagram, or if you're gonna hop on these live calls more often, I'd like to keep up with your progress and how you're doing. That goes for all of you guys too. I'm always very interested in that, because again, I'm really here to help you guys. I'm not here to build an ego. You guys spend enough time with me, you know that I'm not at all focused on ego. I do sometimes toot the horn when it's necessary, because there's a lot of spectacular things that happen, but we're human, right? I don't lead with that though, because I have bigger goals than myself, and part of those goals is getting you guys in position to get to where you're trying to go. That's the main objective. This is pretty much the sole reason why I'm even on social media, because it's a toxic hellhole on social media for the most part. So, all right, for sure. I appreciate that, Slim. Yeah, just hit me up whenever. So yeah, hopefully all this stuff makes sense from these first two assets, right? So if we got the bonds potentially going lower, depending on how it treats this huge wick up, we may see, this respect and go higher. If it does do that, if it gets above this, it'll go higher. But for now, we'll see how these levels are going to hold, see if it can continue to promote the down movement. We'll see if this can continue to hold in this and continue with the up movement. And if that's going to happen, generally we would like to see that DXY goes higher, but there's a lot of manipulation happening. Lots of things happening. The government shutdown conversations, the dumping of U.S. debt from some of our allies and enemies, which is it could damage the value of the dollar. We have just wars and just so much stuff. So there's a lot of fear that seems to be really affecting the U.S. dollar. So we'll see how that impacts things. We also have Japan going through some problems as well. I think they're the largest holder of U.S. debt. So, something happens in Japan with their whole situation, sometimes it has an effect on us, interestingly enough. But yeah, we were watching this breaker in here. Okay. Let me pull up the main chart. So yeah, we were watching this breaker here, which is also a bearish order block. Okay, it came off that quarterly high up there. Okay, once it took this high, we talked about this, all the stuff we talked about before. If you want to go kind of dig into this in great detail, all the stuff we did inside this, you guys can go watch the replays from these times. Just look up the Sundays and Tuesdays previous to today, and you can go see all the different commentary that we talked about on Sundays and on the Tuesdays. Lots of lessons to learn. But again, we have this order block. It's also a bearish breaker, low, high, lower, low. I did map this out, as you can see. I said if it can't get above this and it declines, and it was to break through some of these levels here on this daily chart, right? If it would have got down below this breaker, I said once it does that, my interest will be to see if price can get down below the lows. And ironically, it broke through that stuff very quickly. And what happened once it did that? It violated further to the downside. With all these things happening too, it kind of just makes even more sense why, since that broke, price was going to decline. Again, we've been calling for this as a possibility if that was going to break for quite a while, right? For at least the last couple of weeks. Well, since it got up here, right? Last 2 weeks. And we watched this order block. We had this wick here. We had this breaker. We had the volume imbalance. We had this swing low. All of those levels, including this monthly inversion fair value gap here. Go to the monthly chart. It's right there. All of those levels played a significant role, or were playing a significant role in me continuing to confirm that it was going to keep going higher. But they got violated. And so my opinion was it'll probably look to drop now because now we've lost 3 PD arrays, more than 3, and shifted market structure at the same time after liquidity was taken inside of a higher time frame PD array that led to that response. And then as a result of that, you see, we were correct that it was going to keep continuing to go lower after all that stuff took place, right? That trigger for sentiment shift was accurate. Generally, they are, right? You guys see it through examples every single week. You also see when these things hold and they continue to stay intact, we continue to keep going and we stick to whatever the narrative is that we've painted as long as that continues. And then when it changes, you can see we generally do a good job of timing when certain levels get violated, and like when price is going to turn around and reverse, right? Change the delivery profile. And this is no different, right? So now that price has gone down below this low here, we're back inside this quarterly fair value gap that I've talked about literally since last year. We used it as a target initially last year. If you go back and look and see what we did, we called this whole entire move lower, and then we called this move lower again. We talked about the buy side delivery in there too. It just basically did a retracement to a breaker on that higher time frame, and it just continued down to this quarterly fair value gap. But you can see how long this quarterly fair value gap has been significant. I've had this on for literally over a year, right? If you go back to last year, you'll see when I posted this, and ever since it's played a significant role. The quadrants, right, all throughout the delivery, inside and out. Once it got above it, right, into the quarterly fair value gap here, which I'll let you guys go look at, it tapped into that. We said that once this fair value gap was violated, we'll see if that gets treated as a balanced price range. And if it does and do something like this, we'll continue to start seeing price decline. So we called the turnaround at the perfect time, real time. If we go back to the Sunday right here, right, I literally talked about it in great detail. And then that has led to all the stuff we see here. And now we returned back to a premium, and then violated the 3 PD arrays. So we do have a slight crack in correlation for now. Now, if we see the yields start to really tank and break our invalidation levels we mentioned, we will see the dollar continue to absolutely melt towards this quarterly low down here from last year. It's a yearly low too, 2025 yearly low. So I'm actually put $20.25 low. It's kind of far away. I mean, if we get another week like this, then it's not so far away. But for now, we're going to look at it as being pretty far away. We have the 50% of this quarterly fair value gap. So I want to see if that's going to act as a resistance level. We have this low to this high up here. We've delivered buy side, sell side. This low, we have accumulation, reaccumulation, smart money reversal, first stage distribution, also using the inverted fair value gap, which was also at a time or a level where we invalidated the likelihood of it continuing to go higher. And then we got our second stage distribution here with speed, creating a market maker sell model. Okay. So since that's the case, and this has now completed a market maker sell model, this whole entire range is now going to be looked at as a balanced price range. I do not want to see this down candles range get violated. So that'll be my line in the sand. I don't want to see us get beyond the 50% here. If it does get beyond the 50% of this market maker sell model that previously was delivered from last week, If it gets up into the 50% of that, then we may not be done targeting things like these relative equal highs and maybe even these highs up here. But if the yields continue to tank aggressively, we'll continue to favor that this is going to go lower. So that's my opinion for the dollar. I want to see if we can get this to continue to go lower. If we move up to the 2-day chart, we could see that we have a low, high, lower low. So that's now a bearish breaker. Let's see, how far do we go? How far can we go up? Yeah. Yeah, we can use, is it a weekly breaker? Yeah. We have a weekly breaker here. It's more so an order block. Yeah, it's more so an order block there. We also have this very large wick. Ironically, that's where that breaker's at. You kind of see how that converges together with one another. That large wick, because it's followed with a displacement, 50% of that wick should not be traded through. Whoops. So yeah, that is, it's going to be my opinion for the dollar, plain and simple. If I can get the midline. Yeah. Okay. We had this monthly equilibrium too, from this low to the high. You notice how we got below it, attempted to run back to a premium, got into a deep premium, hit a premium array, being the weekly bearish order block or bearish breaker, and then has aggressively displaced, changing state of delivery, invalidating the 3 PD array rule, inverting a monthly PD array, delivering a market maker sell model that's now exploded through these lows here, and now very well may be reaching for something like this, right? So we'll see what happens. Okay. We have this low here too, so we got relative equal lows. So again, I wouldn't be surprised, given how nasty this drop was, I wouldn't be surprised for them to open up. If we're thinking power 3, we're also ahead of NFP, or we're ahead of FOMC and rate announcements and a government shutdown. So I wouldn't be surprised if they open up, rapidly run higher, hit this level in here, like I mentioned, is going to be significant. Whoops. Right? Refuse to close in the rest of this, because again, there's going to be a fair value gap that's going to form. So we may set up something like this. Right? I would ideally want to see something like this. Right? Maybe it runs up into that level. Maybe creates a little wick in there too. See, can I fit that on there too? Yeah. Maybe it fits something like that, right? Opens up, rallies up into the fair value gap, leaves a portion of it open, because again, this is all the balanced price range to the left of this imbalance. So ideally, we're not going to even make it to the 50%, because this is also a weekly wick 50% level. So if we can get something like this to unfold, that would be picture perfect. And then we could look for price to want to look to target this low down there, especially if the yields drop and the bonds rally. We will have a pretty solid likelihood of this taking place. May not happen for sure, but it may not happen like this perfectly. I assume that this could be the case, because that displacement happened. They're going to pull price back. They may create an imbalance or a fair value gap from that. And this is my favorite tactic here. I like to anticipate this, and it happens over and over and over. Daily fair value gap fills to redelivery, right? And then once you're able to identify this, I mean, it's a pretty solid done deal especially if we're going to use this type of tactic. If it opens up and immediately starts to run back, I mean, in a bearish market, price has been clearly declining. If we have price pulling against it right at the start of the week, that's ideal. That's what we want to see, because that's consolidation manipulation in the bearish power of three. And so we want that to happen, right? We could even trade that move if we see it and can anticipate that that's in fact what is happening, because there's a target it wants to reach for, maybe the gap up here, right? Or the wick, right? And we have a BPR over here. It's a fairly common thing that happens, right? With the after an imbalance from the previous week, we may have a small Sunday, Monday delivery, and then going into Tuesday and Wednesday, if there's news, right? A news event could lead to this being traded into, and then that could be a manipulation, and then just as a result of the news, fly off the handle towards a logical level like this. Okay? It may not even want to get that deep. I do believe that this imbalance should not be traded to, though, because we have buy side, sell side with an imbalance overlapping previous sell side or previous buy side delivery. So there's really no real reason for it to want to have to do this, okay? Or like to go beyond this. And this is pretty likely in my opinion. So we'll see what happens as price prints, but this is what I would really like to see throughout the coming week, if we can get it. But yeah, this will be a picture perfect idea of what I'm looking for, okay? And again, the low here is the most significant right when price opens, this high. But even before that level, we still have this 50% of the wick there that I showed you on the weekly chart. That's significant. The 50% of that wick is also pretty close to the 50% or the, what is that, 75% of that right there. Oh yeah, that'd be pretty nice to see that. Wouldn't that be nice? Perfectly aligned with the 75% of the quarterly fair value gap. I think that's a pretty solid little assumption, actually. I wouldn't be surprised if that happens exactly. I'm gonna keep these on there, actually. Yeah, I'm gonna keep that on there just for reference. So yeah, we'll see if we can get that. Okay, but that's my opinion for the DXY. Okay, do you guys got any questions? Here, hold up. I'm gonna go to the bathroom real quick. Just leave any questions in the chat. Okay, I'll be right back. Let's see. All right, I'm back. Appreciate you guys waiting for me. So yeah, let me see. No, it's clear. Okay, cool. So hopefully everything has made sense. But yeah, so now let's move on to the indices. Okay, so if we look at what price has done, again, if DXY is going to continue to drop, eventually I would like to see the bonds go higher if we are going to trust that the indices are going to go higher. And then of course I'd like the yields to go lower. And if that happens, that's great. Going into February, we may see that happen. We just have some red things around us, right? Like the shutdown and some of the other geopolitical things and things happening in the U.S. economy. There's positives and negatives, right? So yeah, we'll see what happens. The last week I did talk about how this order block's being respected, right? I did talk about this wick here trading into it being respected, and then I did talk about how this could potentially be a liquidation event, considering that we closed back above this wick in here, right? And now we're pretty well above that, but we're inside of this sideways range. So I'd really like to see some type of displacement to get us out of this, right? Whether that is to target the low here or to target these highs up here. We have a regular trading hours gap inside of this high, and we also have a new day opening gap that I've been talking about for a pretty long time. If I can actually go pull that up real quick. So yeah, we called pretty amazing moves in my private group the other day. All targets met. Actually get rid of some of this stuff. Oh. I think I'll keep that. Yeah, that fair value gap was hit. See that yearly 25% of the previous year's wick? I talked about that right at the start of the year. Notice how that's been used all throughout price delivery up to this point. Whoa. It was used literally all through January. See that? Even up to this point. Right. But yeah, let's start here real quick. Okay. So again, that weekly perspective, we hit this order block. We've stayed above that, hit it again, stayed above it, and then we traded down, liquidating this low, hitting the 50% here, and now we're well above it. So the liquidity pools that we have to pay really close attention to is going to be this high and that low. Okay, and then anything beyond that comes secondary. We do have this new day opening gap up here. If I can pull that up and show y'all. Let's go point this out. I talked about this for weeks at this point, but let's go show you exactly what it is and why I'm looking at it. So you know how I am. Those of you that have been with me for a while, I like these really, really shown up gaps, or like very obvious gaps like this. That is beautiful, beautifully inefficient to the sell side and the buy side. Right? There's no trading happening inside that price level. So they may look to gravitate up there if they're still interested in going higher. We've had this outline since the start of the year, right? And I'm still not fully out. We're still not fully out of the woods, especially because we've had such a dramatic explosion to the buy side because Trump said that the tariffs are no longer going to be implemented, right? Same thing happened last year when I was able to call the low of the year, right? Trump said tariffs, 100,000% tariffs, we're going to crush everybody. And, he always starts up here and then brings them all the way back down in reality, right? And so the whole world's flipping out. Same thing this time. And price declined. And he said right up in here, like at the World Economic Forum, that he's not going to be putting the tariffs, that he's not going to take Greenland by force. And all of that news sent price higher. And then we called it higher from that point on, aiming to fill in the rest of this gap. And I did say also last week that if we get up beyond this gap, our 3 PD arrays from that higher time frame will be violated to the buy side, getting us back in line with the bullish trend. Those 3 PD arrays, looking at this time frame as we were, first of all, it broke down below this wick, this volume imbalance, which is a new week opening gap, the swing low here, and it initiated also this bearish breaker. And then that was used to liquidate these lows. We hit an hourly fair value gap, which was also inside of a weekly bullish order block, 50% level. That's what this is. This is the high of it. And the price immediately has now gotten above. So the low here, right, this gap and this order block and this breaker, right, those are all levels of invalidation if we were to trade beyond it, right? This gap, if I didn't mention it, right? And then we got a change in state of delivery here. So we traded above it. Price attempted to get back down into it a little bit, but it's respecting it. So for me to be bearish again, given how accelerated this was, how deep we've gotten up into a premium, I would prefer to see us get down below 50% of this if I'm going to trust sell side again, which I'm not. For the moment, I'm not, right? It just simply looked like this was used to liquidate from that weekly chart. It's a little bit more clear on the weekly chart, but it's also inside of a range. So it's a harder to trade environment. So if you struggled in the indices, this is what you're trading in. The time of year is what you're trading in. The things that are happening in the world, right, that are directly associated to like the economy and all these different things, the stability of the world, those are things that you're trading in. So you should expect it's going to be a little more tricky. And that's why you should never overtrade and over leverage, especially in times like this. You should never do it, but especially in times like this. Seasonally too, on top of that. So all these factors are playing into how price is delivering, right? In this case, it's sideways. We're in a big, huge range that has no follow through long term because they're waiting for decisions to be made. They're waiting for results to come out for things, right? For certain stuff. Is there going to be a war, right? Are these countries going to drop a lot of the U.S. debt, right? Are we going to put tariffs on everybody? That's so suffocating that, it would mess up a lot of things, right? Are we really going to do those things? So it's waiting for those answers. Some of the answers have already been arrived at, like Greenland and whatnot, like I said, but there's still a lot of uncertainty. But the fact that it's been announced that we're not going to take Greenland by force, maybe by a deal, but not by force, and the fact that the tariffs are not being placed on everybody except Canada, we've had a recovery, right? And now we've broken back above our invalidation levels if we were going to continue to watch this go lower, which is these levels inside here, right? So as long as we stay above this gap, because what is it doing in here now? See the large wicks back and forth, back and forth. It's balancing out this gap that had no trading in it, that was inefficient. So it's delivering back and forth, back and forth, back and forth, right? So if we stay above that after this change in state of delivery, and we violate the upper portion of this breaker here, which seems to be what we have done or started to do, right? Once it gets above that, that'll now turn into an inverted breaker. And then we'll also continue to have faith that it's going to continue to go higher. We have equal highs up here, clearly, very obvious. I figured that they would be leaving those and not leave them like entirely. So again, we have this gap here. We have these highs here, just like how these highs are this high and that low, or the current high and low and the previous high and low, how they're important because they're in close proximity. Well, when price starts getting close to levels like this high or this high, and you're on a daily, weekly, or a monthly chart, or any of the higher time frame charts, that becomes a significant liquidity pool, right? Before any of these upper levels get targeted. So from here up to this high or even up to this high, there could be a framework in there that you could target. Any of the models that you want to use can be found inside of that. Just that small little range up there. Well, it's like 300 points. So it's not necessarily small, right? But yeah, so my opinion, given what we see so far from this higher time frame for the NASDAQ, speaking about the things that we talked about the other day, right, or the other week, right, last week and the week prior to that, the levels that should have held if we were going to, in fact, support down movement, which would have been this wick, this order block. I would have preferred that it failed to get up into this gap. The breaker here, right, all those levels are being very much contested. Some of them have already been turned off, right, that being the wick here. We have a fair value gap, I actually have a suspension block here that I didn't highlight last week. I had it on there for a little while, but it was getting too much. But now we're above this suspension block here, which is just a volume imbalance with a displacement and then another volume imbalance. So yeah, we have the daily actually, let's just call it an S block. Oops, a little too big. Okay. So yeah, we got that suspension block in there and we're right above it. It's also in conjunction with the new week opening gap, obviously, because it's part of the volume imbalance. Again, you guys may be seeing these gray boxes if this is your first time. This is just delineating Sunday. So then every time we look at the chart, we can immediately find the weekly highs and weekly lows, right? And observe power 3 from a very easy view. Like instantly, we know where Sunday's at, which is where new week opening gaps are and everything else, right? So again, if this continues and we stay above this, that will be something that I'm interested in seeing hold. Right, if we stay above these levels, I want to see that hold. Let me actually take some of this off. Yeah, fair value gap. Wait, whoops. Wait, what the hell? Okay. Oh yeah, and this is a move I call my private group. To the tick. But yeah, we're not worried about the lower time frame on Sunday. But yeah, so again, if we stay above these levels, especially this gap in here, I think that we should have a pretty solid chance to continue to see price move higher. We got this daily chart here. We have I guess a little fair value gap in there. Do we? I don't necessarily see. I don't see the. Oh. But yeah, no, I don't know why that's kind of off a little bit. Daily. Why does it look like that? This is the daily chart here. Why does that look off? It's kind of weird. Yeah, I'm gonna have to figure out what the problem is there. I think there's a volume imbalance in here, right there. But even that, it just looks a little bit off, huh? I don't know. Not too sure. Wait, okay, so, oh yeah, it's the last 3-4 days. Yeah, it's a little bit off, huh? Yeah, I'm gonna have to figure out why that's a little bit off. I'm sorry about that. So ignore this. Fair value gap in there. I'm not sure what. It's not even aligned with this properly. Yeah, I'm gonna take that off. Okay. But yeah, it doesn't change anything. It just kind of threw me off. I'm sorry about that. I still want to see this stuff stay above. This is a change in state of delivery. If we can get price to open up, create another down candle, and then violate it again, that's a double change in state of delivery. So that'll make me even further confident, even more confident that we will come up and try to target this new day opening gap up here from December 10th or 11th. And then beyond that, we have, again, relative equal highs, and then we have the regular trading hours gap. But before that, right, it's going to have to take this, and this out. So those are my main initial targets. And if we can close above this down candle here, which is a bearish breaker on this daily chart, then I'll look at that as an inversion level that'll continue to go higher, okay? The only way that I will be looking to be bearish again is if we can get some serious decline that closes below the 50% of this change in state of delivery or order block. This order block, as you guys know, order blocks, breakers, fair value gaps that get overlapped, right? Those are all balanced price ranges and should be treated as such. And if they don't get treated as such, you may be incorrect and price may look to go the other way. Okay. So yeah. And I guess that's pretty much all I have for the index or the NASDAQ. Let's actually go double check. Let's double check all three of them. Again, there's that SMT at the highs we've talked about. So we'll see how justified that will be in the coming days. We also got to see how this is going to be treated, right? So again, we do have the SMT. So again, if this was to break down and get below the gap again, and then really accelerate, taking out the 50% of this, think about it from this perspective, right? If we're looking to see this go higher, what are our three PD arrays in close proximity to where price is at right now that we don't want to see get violated if we're going to still be bullish? Well, we have the gap in here. We have this wick 50% level. We have the volume imbalance. We have this wick 50% level. We have a new week opening gap. The other new week opening gap, right? The most recent one. This order block 50% level. And of course, we still got this weekly bullish order block 50% level. But from this time frame here, those are levels I don't want to see get violated. Because we're above them, if we're bullish, we should see those types of things hold. It shouldn't dig through those. If it's looking to get up here, why would it want to do that? It won't do it, unless you're wrong about bullishness. So when price opens up, it may wick lower to try to get into this again, accumulate once more, but we don't want to see it get too aggressive to the downside. If it does break down again, then this breaker is still intact, especially if it does not trade beyond the upper portion of this high here, which is above the breaker there. In that case, if it gets up there, then we have a pretty free ride to target this gap up here, this new day opening gap, the equal highs up here, which is also followed by the October regular trading hours gap from last year, which is massive. Look, you want to see why I'm so concerned with that? It's because it looks like this. It's huge. If you go to the continuous contract, you could see it a little more clear, but it's huge. It looks like this even on the continuous contract, right? So it's massive. I've had it since October and November, right? So, and we switch our contract months, so it kind of makes it look all wonky, but yeah, we've had this outline for literally months. So, yeah. So that being the case, let's actually take regular trading hours off. So if we're looking at the Dow, I'll do a quick analysis here too. We have an order block. We're above this high and that low. We created a breaker here, created down movement here. That's an order block, these consecutive down candles. So the upper portion should be respected. Notice how it's sensitive right there. It's also got a wick here, 50% levels being respected for now. If it violates this order block here and then just really rips below, like this candle, right? Like this range in here with this order block, then it's not holding. And if we lose an order block, then we're losing a balanced price range, and we have SMT at the highs. And if we see the other two drop, then this will follow, especially if DXY was to rally, right? But we'll see. If DXY keeps falling, it supports the analysis that I've just laid upon you right now about how these levels should hold, why I'd be assuming or having an idea that price could still look to go higher. What will confirm my opinion that price will still go higher, and what will negate that and make it so we have to be flexible, and then how you can go about being flexible when you can decide that, okay, I might as well scrap the buy side delivery and then start to look for shorts, right? Let me actually okay. Why doesn't it pull it up? There we go. Order block. Where is it at? I don't know. Okay. So yeah, that's pretty much my opinion on the indices. Do you guys have any questions? Let me look at the chat. I think drawing liquidity is clear. Guys, have high resistance. Yeah, that may be the case, especially with all the things that are happening. We may see high resistance. We'll see. We shall see. Definitely something to keep note of. Yes, we look to go up high due DXY decline, but you have to be cautious. Last week was the first week inside the month again. Yep. Yeah, and it's the end of the month too, so we're gonna end up eventually rolling into the new month. They may save that super displacement for the start of next month. They may hang around inside this little gap in here to just balance it out even more, right? Just offer more and then just accumulate in there while they look to go higher. Because if you take the down movement, if you're thinking price is going to go higher, if we go to the 1 hour chart, we talked about this being a potential market maker buy model, trying to target the highs up here. It looks like it's been unfolding in that way up to this point. So that's even more reason why this should not look to want to break down very deeply below these lows. We're in the latter portions of a potential buy model that's pretty solidly nesting the terminus inside of the high up here, right? And we're almost there. So it's something that we're going to have to keep tabs on, okay? I don't want to see this high, this low, 50% of that get violated. You could take this high to that extreme low, because that's the larger one encapsulating this high to that low, the 50% of that whole range. We should not see that traded through if this is going to act as a balanced price range. It's sideways, right? We have buy side, sell side, buy side, sell side. Inside of this gap, it's intentionally being used to balance out that piece of price delivery. So if it's going to go higher, we ideally don't want to see it break down to this low if it is going to continue the buy model, because we're in the latter portions, the upper 75% of the range from this high or this high down to the low, framing out this high as a target. So that's where second stage distribution unfolds. So if that's going to be the case, right, we could hang around a little bit. Ideally, it gets up there soon. But because we're so deep up here and we have these other PD arrays and all the stuff that we've talked about, it's really not much of an expectation that it's going to want to get down to here. And if it does, it could be a problem. So those are things we got to keep tabs on, okay? So yeah, it's pretty much all I have for the indices. We had daily S&T, NQ. Took Thursday's high. Yes, didn't. Yeah, we also have the very large S&T at these highs up here. We've been talking about that since the start of January, right? And if we go to, oh yeah, you're talking about these here. Yeah, we'll see. We'll see. That could end up initiating the move lower. But again, if we get down below these lows, then we're going to scrap the overall buy delivery. We have relative equal highs up here as well. So yeah, again, if that does turn into price breaking down below here, then we go with our contingency plan to favor further down delivery, right? We're kind of just inside the middle of the range here. So, we do got to think about both sides. There is SMT at the highs, like you just mentioned, Slim. It could be something that ends up being useful. We have it there, but not only there, we have it at these highs, as we've been talking about. I did early on want to see with this move, as we called this higher, I wanted to see if we could peek up through that, close it in, maybe even tag this, and then look to decline, maybe for the manipulation of the year, right? The yearly power three. But we may just see it start here, right? The open price for January is right here. So if you drag that over, yeah, if you were to drag this over, okay, price ran up, declined, got below the open price for the start of the year, and now it looks like it wanted to kind of react up there. Because we broke so many PD arrays to the buy side in here, we got to be cautious. And again, we have our 3 PD arrays that we can outline. The volume imbalance, the order block, 50% level, the wick 50% here that you can clearly see held. It's not random that it perfectly bounced from there. We have the gap, right? We've violated this order block, so that's invalid. But we do have this. So that SMT that's happening that you just pointed out is happening also inside this bearish breaker here on this daily chart. But the problem is we've violated so many PD arrays already in this little piece of price delivery, and we're in the middle of this range from this low to that high. We're at 50% equilibrium. So it can easily just stall out to close this month, right? Which, from this open price here, that's the whole monthly range. It may just fizzle out because it's the end of the month. And then to start next month, we may get, maybe one more punch up. And if it is going to go lower, release from that, or we may open up in the next month, decline a little further into this order block, tag some of that liquidity. As long as we stay above the 50% here, it still has a chance to go higher. But once it breaks down through that, we'll be set to continue to go lower. And that SMT will have proven to have been supported by also this one and this one, leading to basically the decline, which we'll get in line with eventually. For now, though, we got to be cautious. We got to have, pretty solid main framework. I believe that because these PD rates have been violated, as long as we stay above these levels, it still has some life to get up into these logical levels. But again, if it was to use that SMT and then violate, get really deep down into this, we got to be skeptical and be flexible, and then possibly catch some shorts, which we'll be ready for if it does happen. We're also inside of an inversion fair value gap on the daily chart in there. So staying above that would be another reason to continue to push it higher. It's also this one too. And then we have that suspension block in here too that we're above. So, lots of reasons to potentially support, especially with bearish DXY being so aggressive. The dollar and the indices do the opposite. So all this stuff considered, it makes me feel like I want to support, first and foremost, my main objective is to see these, if they're going to hold. If they don't hold and this holds and then violates, then we'll be flexible and target the shorts. But my main objective, because everybody does, it's going to go bullish or bearish, and whichever one's correct, I'm going to claim that I'm right. My main objective is to see if we can go to the buy side, because it's in a consolidation, we have a contingency plan, right? And so the contingency plan will be if we violate these levels, I will take buys off the table, and then we'll have to adjust and go with the contingency plan. But the main objective, what I'm aiming at, let me put my neck on the line idea. I want to see if this can hold and then try to get us up beyond to the buy side. And then if we have to adjust, we will. And we're ready for it. We have a framework for the adjustment, right? So that's going to be my opinion on this. The rate cuts, if they don't get touched, if nothing happens, then nothing's really going to happen, honestly. It's only if they get cut or increased that are the times that we got to really worry about, because it could be instant, vicious, nasty movement because things are in motion. Nothing being changed just means that nothing's being changed. There's not really much of an announcement. It's just like, hey guys, it's the same. So what's already in play is going to continue to be in play. So that's how you kind of want to look at that, okay? So yeah, I don't think it's a start of down move. Yep, it very well could be a start, Slim. We can't think that it isn't, right? It may, but we need more information, right? But you're right to be on the same side as I am, because of hopefully because of the things in here that I've explained making sense. Not just because I say it. Hopefully it's because what I've described has made sense to you for your process and what you utilize, right? And if that's the case, good job, right? And we'll see what happens. So yeah, that's pretty much all I got for you guys with the indices. And if we go back to gold, holy crap, we're about to hit 5,000. Man, the call outs that we've done on gold the last like 3 months, I mean, it's been ridiculous. I should have been trading gold more than once. I traded it only one time on a Sunday like 2 months ago for the first time in 4 years, both for trading on a Sunday and trading in gold. Absolutely crushed it. I should have taken way more trades at this time. Like at least on gold, not like in an over trading fashion, but just more participation in gold. But we've been calling them. I called this. I said this should hold and we should continue to go higher. This high and that low should be a balanced price range. Was I correct? Yo, Tony, if you're still here, you trade gold all the time. We specifically started talking about it more because you trade it. And I used to trade gold a lot. It's looking really nice now too. But the call outs have been absolutely ridiculous for gold. Everything. We've called literally every asset I just touched on today. And they've all done pretty much what we wanted them to do. And it's recorded and documented. So I'm not just speaking out my ass, which is amazing, right? It's a minority in the trading community. Most people are not able to do what we do. And you guys are becoming savages too, right? So, thank God, thank ICT, and thank yourself for putting in the effort. And thank you guys too for trusting me. Yeah, see, Tony, look at him right there. Perfectly down to a T. To the tick every week, and it won't stop, like ICT says. So yeah, because this is just accelerating, ICT's rule when we're trading at all-time highs, you do not anticipate picking a top. So if you trade gold, you're not picking tops. You're thinking, okay, we have a down candle here, we have a wick here, we have a wick here, and it's respecting this fair value gap. Let me ask you guys this. Those of you that have been diligently with me for a long time, can you explain to me, somebody in the chat, why this fair value gap was left open? Can you explain it to me, or explain it to everybody based on what we've talked about and what you now see proving every single day about reasons that fair value gaps get left open? Do you guys remember why this happens? What do you see in price that we've talked about before, and why it's not being traded through deeply and was just a shallow upper fair value gap delivery? Any of you guys that have been with me for a while, we've talked about it a lot. So let's see. Let's see if y'all were listening. Let's see. Let's see. Mike, my brother. Look at the wicks. Anytime there's a wick that's overlapped with a displacement, you will expect the price is not going to have a deep retracement into that fair value gap because it's a balanced price range. Why? Buy side, sell side, buy side again. Does it really have to come back down and offer sell side again? It's already did it. Right? So it should not have to come back down into it. And yet again, there it is. Very, very powerful little nugget right there, Slim. You're going to go into your studies and see this. It's going to be one of them crazy, overwhelming aha moments because it's happening all the time, on every time frame, 24/7, 365, on every asset. One of those little quirky things that's super, super powerful. One of the main reasons why a breakaway gap forms, right? Or why a institutional order flow entry drill, which is what this was, is also delivered. And why you should expect things when it looks like this, why you should expect that it's not going to be traded into deeply. Because look at this, there was nothing on the left side. So what did it do? It had to fill in the rest of it to be efficient. So that's why it came all the way down into it. Then we came up, respected the wick 50% level, closing above, and then we respected this wick level too, and then it just ran up again. Right? It's all bullish order flow characteristics here, what you see, and things that we talk about all the time. Mike said, especially in this example, after switching order flow to the upside, and we're overall bullish. Yeah, heavily, fundamentally bullish as well. On top of that, we have everything going for us to the buy side with gold. Gold should have been up here. They've been holding back gold for so long, and silver. I mean, look at that. We're at $100 an ounce for silver. Unbelievable. Just what? Last year in August, we were $38 an ounce. Holy crap. That is more of a percentage than every single asset except some cryptos in terms of a yearly gain. Like, holy crap. Like, dude, it like doubled, tripled, quadrupled. Like holy crap. Like, this tells you something kind of scary for the monetary system, because we used to be backed up by gold and silver, or just gold in particular. Every dollar was backed up by gold. You know, that's what gave it value. That's why it's a note. It's a IOU basically, because they used to take their gold and then they'd give them a slip so the bank would hold it, but you'd have that piece of paper that is valued in gold. Now, there's really nothing backing it up. Just the fact that we believe it has value. And it's, part of the petrodollar too. So all majority of the petrol sales, gas, oil, stuff like that, needs to be made in US dollars, which also holds the value. But then again, there's unlimited gas and oil, so we can print unlimited amounts of money, and there's not enough gold in the world now, which is why this is a very dangerous time economically for everyone. The SWIFT system, the US, the West, anyone that's associated with the current monetary system. That's why it's super risky, because if we can't just seamlessly shift to gold and silver, to back up our assets, or the dollars that are in circulation, So I'm not sure. I'm not an economist. I'm not someone that understands all this stuff like as much as some of these bankers and stuff like that. But I do know what I just mentioned, and that alone is clearly stating that we have a lot of problems. Plus, we have so much debt. Every country that's used this and been greedy and stupid with the money. I mean, we're at a serious risk. The financial system's uneasy. They're talking about shifting the debt into crypto, which is kind of interesting. Is that why they created crypto? Right? Is that part of the reason? Maybe. ICT says some wild stuff. What I'm seeing talked about, um, starting to make a good amount of sense. But hey, hopefully, for the sake of everybody, they can figure it out, because this is insane. This has to stop. Something has to change. We can't do this for another 50 years. Not even the next 20 years, I don't think. What are we going to do? Have $100 trillion in debt? Like, really? I mean, it's absurd. It's already absurd. Beyond absurd at the moment. But yeah, hopefully, keep everything in your prayers, you guys. If you believe in God, you need to keep everything in your prayers. The world's on fire. Lots of things happening. And hopefully more innocent people don't have to get hurt. Hopefully countries cannot be at war. Hopefully these people can be responsible, because the fate of the world is at stake, right? So, but yeah, outside of that, hopefully you guys have had a wonderful session with me today. Hopefully you learned a lot. There's a lot more to learn, obviously, for those of you that may be new. We do this every week. We do it every Tuesday. It's our one live call per week. Outside of that, I'm live with my private group every day, doing one-on-ones and group live calls and whatnot. But yeah, before we go, again, we'll see if this wick can be respected. See if this down candle can be respected. See if we don't blow through this fair value gap. If it does get through this fair value gap, if we break this low, right, we have a low here, the down candle, the fair value gap, and this high to that low, right, the wick specifically. Those are our 3 PD arrays. That'll put us in position to take a pretty solid nosedive, which may happen. It may not. We'll see what happens. Right? We'll see what happens. But for the most part, if we're going to keep going bullish, we want wicks to be respected, the fair value gaps to continue this, right, to be left open. Down wicks, up wicks, 50% need to be respected. Order blocks bullish should be respected. Like if we get down below this bullish candle here, we want to see it slice through like butter. That's all confirming continuous bullish order flow, especially if we could see the bonds turn around and be bullish and the yields bearish and the dollar bearish. That's all very positive for this to go higher. So yeah. So again, with that being said, appreciate your guys' time. Hopefully you learned a lot on this call. We have so much more to learn over the years. We've already talked about so much. You guys have made so much progress. I'm super proud of you guys. I'm always here to help. I'm here every week, so just hit me up. If you ever need anything, just let me know. We're all here to help. It's a very supportive community, which I'm grateful for. So yeah, let's keep it that way. If you have anyone that you think can get value from the content, definitely spread the word. If you have gotten value and you like what I do here and you enjoy these calls, definitely don't forget to like the video, subscribe to the channel. And like I said, tell a friend. If you have any trader friends or anyone online that may be struggling, or maybe can even also add to the value that we provide here in this community, that's always encouraged as well, like to bring them along too. But yeah, and yeah, there's nothing I'm forgetting. So yeah, with that being said, God bless you guys. Thanks again for hopping on. Hopefully you guys have a good rest of your weekend. Don't do anything crazy. Remember what we talked about in terms of risk management. And I will see you beautiful people bright and early yet again on Tuesday. And those of you in my private group, I'll see you beautiful people tomorrow bright and early for AM session, okay? So yeah, God bless you guys. And thanks again for hopping on. And have a good rest of your weekend. Peace.